Welcome to episode 51 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring you two stocks, engaging headlines, and reasons investors should care.
This week, we're delving into my experience at PDAC 2026, the Prospectors and Developers Association of Canada's yearly mining convention, which took place in Toronto from March 1st to the 4th and stands as one of the largest in the world, attracting more than 30,000 attendees.
So, Trevor, you've been to PDAC a few times over the years, right? How is this show compared to those overall?
In my case, I've been to 5 conventions so far, and from beginning to end, it's really been a story of increasing investor conviction. The first time I attended in 2021, gold was below $2,000 per ounce, but on an uptrend given investor trepidation driven by the US-China trade war, the ongoing COVID pandemic, and what would become a massive rebound in inflation. Fast forward to 2026, and gold is now more than $5,000 per ounce, having recently soared higher because of an arguably similar set of circumstances. This includes the globalization of the US trade war, as well as persistent inflation and numerous major wars as well in Israel and Palestine and Ukraine and Russia. So people were also pretty cheery this year overall. And when we add that minerals critical to the energy transition, such as cobalt, copper, and uranium, have also appreciated considerably, the overall market enthusiasm could not be higher.
I see. I also read your pre-show article over on Stockhouse, and you wrote there that analysts see gold potentially rising as high as $6,500 by next year, even $10,000 by 2030, right? So after walking the floor over at PDAC, did your conversations with companies and industry leaders reinforce that bullish outlook, or did you hear any skepticism or conflicting views?
I think the executives I talked to were pretty optimistic overall, but they would, of course, never offer a price prediction. They're more excited about that they have a clearer pathway to developing their companies across the mining lifecycle, from exploration to development to production. This is all to say that while a higher gold price would be universally welcomed, gold companies today are actually already benefiting from a serious boost towards profitability where the ounce stands today. And in terms of skepticism, I wasn't surprised to intuit a sense of, how would you say, realism underpinning all my conversations, stemming from the unavoidable fact that gold and economic health are intricately linked and always subject to the whims of investor perception.
You also talked about being a bargain hunter and looking for mining companies that have underperformed despite strong fundamentals. Did you find that the value side of the sector still feels overlooked, or are more investors waking up to these opportunities?
Well, John, in my opinion, value is kind of always perennially overlooked because these companies are down in the dumps and they don't look good to the naked eye and require a significant amount of due diligence to make them look prospective, right? When you combine this with the fact that so many companies in attendance at PDAC have been generating operational leverage due to high commodity prices and outperforming these commodities, PDAC 2026 was really a growth investor's paradise. This is why my coverage of the convention focused mostly on attending companies whose stocks have failed to match up to their operational potential. One of these is Perseverance Metals, a junior critical mineral stock providing exposure to high-quality projects in the US and Canada, whose high-profile investors, including Tech Resources and Osisko Development as well, and an abundance of leads to harvest exploration upside, have collectively resulted in an only 44% return for the company since going public in October 2025, last trading at $1.08.
Were there any other high potential companies that also stood out to you?
Libra Energy Materials is another name worth mentioning. The Explorer's flagship Flanders North, Flanders South, and SVC projects in Ontario are being explored currently under a $33 million, 75% earn-in deal with Cobalt Metals, which is an AI-powered critical minerals explorer backed by Bill Gates and Jeff Bezos. The company also complements its flagship assets with 100% ownership over 4 highly prospective lithium projects in Ontario and Quebec, plus 21 lithium projects, 8 graphite projects, and 1 cobalt project in Brazil, making the company one of the largest energy materials explorers in the world at a more than 30,000 hectare land package. Should the company continue building value through consolidation, growing from 6 to 37 projects since going public in July 2025 at less than 10% shareholder dilution, investors should look for the stock down by 40% to better align with its considerable size and exploration upside potential.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Perseverance Metals, Libra Energy Materials, and the Prospectors and Developers Association of Canada, and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.